Hey, what's up, everybody? How you doing? This is Anthonyfallin, Tone Setter Financial. Hey, I've made a video in a while, and things have been real crazy for this past week. Um, just to let y'all know, for those who do care, yeah, I was recently in an accident right before my birthday, which was this past Monday, right after Thanksgiving. I was going to head home, but unfortunately, this that took place. But I'm okay. I'm alive. I'm well. Um, Everything else, the due process afterwards will take care of itself. Um, but I'm more thankful that I'm alive because it was a pretty serious accident. You know what I'm saying, and was able to walk away scot free. But let me get into this um, with you guys with this uh, article uh, in from Investopedia, written by Corey Mitchell. It's talking about gold, the other currency. Okay, throughout the ages, gold has captivated humanity, and at the end of the gold standard, there was an increase in financial instability and inflation. During the multiple stock market crashes in the first decade of the 21st century, the price of gold began to rise again. The idea of returning to the gold standard became more popular at that time. Admittedly, there were inherited problems with the gold standard implemented in the 19th and 20th century. Okay? Um, what does he mean by that? Is that gold, people, because gold is, when you can have accumulated a lot of gold. I mean, you got to walk around with that. Um, you got to walk around with gold, and gold gets heavy. You know what I'm saying? When you have weight, when you have it by the weight, you know what I'm saying? But you can't walk around with, trying to walk around with a kilogram of gold to go pay for something. It was hard to make it a medium of exchange. They haven't figured that out yet on how to make gold a medium of exchange if it was to return as during those times. But anyway, that's my opinion on it. There's probably some other intels on it as well, but that's that's not the point. I'm just reading uh, this article. Many people fail to realize that gold is a currency under the current system. Okay, gold has often began as well. Gold has often been thought of in relation to the U.S. dollar, mainly because it is usually priced in U.S. dollars. Not only was it priced in U.S. dollars, but the U.S. dollar used to represent $1 used to represent 1.5 grams of gold. Okay, um, there is a long term negative correlation between between the dollar and gold prices. The facts must be considered when we see that the price of gold is simply an exchange rate. Just as one can exchange US dollars for Japan yen, a paper currency can be exchanged for gold. Gold also played an essential part in the original money. Okay, and see, and this is what we've been talking about. This is what I've been talking about, and some of my business partners have been talking about. That gold is real money. Gold is real currency. Matter of fact, gold. It says it right here in this column, that this article, that gold is currency under this current system. Okay. Key takeaways: under the free market system, gold is currency. That's one bullet point. Over the long term, a declining dollar meant the rising of gold prices. Okay, by purchasing gold, people can shelter themselves from times of global economic uncertainty. I mean, listen to that last part. Purchasing gold, really exchanging, because as I make a point of reference again, is that if gold is currency, right? Just like the yen and the shekels and all of that stuff, the franc, the U.S. dollar. That's just like, for an example, if I have 4 quarters and I ask, would you exchange these 4 quarters for $1? You didn't purchase a paper dollar bill for 4 quarters. All you did is exchange for the same value rate. So can't not purchase gold. He's still talking. See, this guy is still talking like gold as a commodity or something like that, or whatnot. But he clearly states that gold is currency in this current money system. So you, by purchasing gold, as he says, you cannot purchase it. You're only exchanging for the same currency rate. You know, your dollar, you're exchanging your paper dollar for currency, for the value of that currency, or for the currency grade of gold, whatever value. So if gold is $50, is 50 USD, then you exchange 50 US paper dollars for 50 for that gold amount. You know what I'm saying? Which is, let's just say, as a gram. So if a gram is $50 in USD, so you just give them $50 of your paper currency for the currency grade gold. Okay, because there is a difference. There is a difference. We're talking about currency grade gold here. You know what I'm saying? Because just because it's on your jewelry and stuff like that, you know what I'm saying? Just like this right here, uh, jewelry, your watch, and all that stuff. That's a different grade of gold. That's a harder gold, not currency grade. Okay, but let me just read this from this key takeaways. This third bullet again. By purchasing gold, people can shelter themselves from times of global economic uncertainty. Okay, gold. Now let's go to the second part of this article or column. Uh, Gold is currency. Under the free market system, gold is currency. Gold has a price, and that gold will fluctuate relative to other forms of exchange, such as the U.S. dollar, the euro, and the Japan yen or Japanese yen. Gold can be bought and stored, but it is not usually used directly as a method of payment. However, it is highly liquid and can be converted into cash in almost any currency with relative ease. See, and it's funny. I just had this conversation with someone, and he was asking, like, how can, if gold is an asset, how can it be liquidated? We were talking about liquidity. And I was just like, you can go anywhere. You go to your gold market dealer, and you can exchange your paper currency for gold. If where you are trying to purchase something, because there are cases you can go to a convenience store, um, like someone that's Afghan or whatever like that, and they might take your paper gold or your gram and allow you to purchase whatever. You know what I'm saying? Like whatever you may have and mostly you can get, most people might have it in a gram or whatever, and your gram is worth $50, and so you go and purchase whatever, what I'm saying, for $50. $50 worth uh of items, gas, what I'm saying. However, matter of fact, I know that there's a story from one of my partners where he took the cash gold note, um, and and he purchased $20 worth of gas, and the owner of the store took that two tenths of a gram, 2/10 of a gram, in exchange for payment. Something like that. Don't get me wrong with that, but I know it was something along those matters. Okay. Um, but as he's saying, because see, gold is universal across the globe for the most part, everybody knows that gold is real money, except here, you know, except here. And yes, is has been a hard. It has had some difficulty as a medium of exchange because, like I said, going toting gold around is not a very common thing in this society in the United States anyway. But anyway, we're just toting grams of gold around. You know what I'm saying? But but I'm gonna get to that because we do. I know of a gold by tenths of a gram in the paper note form, and I'm gonna show it to you. Okay, where it's tenths of a gram at a time, and it looks like cash. Does that interest you? But anyway, but I'm gonna finish reading this column. Okay, it follows that gold acts like other currencies in many ways. There are times when gold is likely to move higher and times when when other currencies or asset classes usually outperforms. We can expect gold to perform well when confidence of the paper currency is waning during wars or when stocks suffer significant losses. Okay? So gold rises during that time when he's saying when the paper dollar is waning, and right now the paper dollar that we know of, it is losing its purchasing power, or it has drastically due to inflation and such like that. Okay, um, investors can trade gold in multiple ways, including buying physical gold, future contracts, and ETFs, gold ETFs. Investors can also participate in the price movement without owning the underlying asset by purchasing a contract for difference. See, and really, when we go back to the beginning, he's talking about the price of gold, stuff like that, and now he's talked about people, investors, and stuff like that, or trade gold in multiple ways, including physical gold. See, you want to own physical gold, right? You want to own physical gold, and I'm talking to you. I mean, whatever your what or however much you make, whether if it's six figures a year or 30,000 a year, and if you're making six figures a year and you have everything tied up in paper dollars, you need to own some physical gold. We have an avenue for you as well, but I will get to that later. Um, but when he's talking about future contracts and ETFs, see, this is what is causing the gold to stay where it is right now, because that means gold has to be reevaluated physically, on the physical side of things, the actual physical price of physical gold. Because we talk about ETFs, we're talking about electronic transfers, we're talking about like bonds, stuff like that, where people are uh, trading, investing on gold bonds and contracts. See, we're talking about just pure paper, just like on your, just like your, like I said, bonds and stuff like that. It's no different. I mean, please, are y'all following me here? I'm trying to convey this, trying to get this over to y'all as best as I can, and I'm doing this without really writing down notes. I'm just spitting this off. I'm just talking this right off the dome, and trying to make sense of this the best way as possible, and not trying to sound all smart and stuff like that. But I just know what I know, and so I'm giving it to you. Okay, gold and the U.S. dollar. The third part of this column. Gold and the U.S. dollar have always had an interesting relationship over the long term. A declining dollar meant the rising gold prices. In the short run, the relationship can break down. The U.S. dollar's relationship to gold prices is the result in the Bretton Woods system. Okay, the Bretton Woods system is what after World War II, there was a conference called the Bretton Woods. You know, the Bretton Woods system was created through a conference after World War II. I'm going to read it anyway. The International Settlement, which is BSI, I mean BIS, um, BIS. The international settlements were made in dollars, and the U.S. government promised to redeem them for a fixed amount of gold. While the Bretton Woods system ended in 1971. Okay, I'm going to stop right there. Like I said, the Bretton Woods committee conference is when all global powers came together and determined that the U.S. dollar was going to be. It was determined the U.S. dollar was going to be the global standard for all countries. So every other currency, paper currency out there fell under the U.S. dollar, should I say? That's why the U.S. gained is. That's how U.S. That's how the U.S. gained its global dominance in currency. You know what I'm saying? And so as you see here, that the U.S. promised to redeem them, meaning the international settlements in other countries, for a fixed amount of gold. While the Bretton Woods system ended in 1971. Why did it end in 1971? Okay, that's when Nixon announced that the U.S. dollar was going to decouple itself from the gold standard. The U.S. the U.S. remained a global power when they discuss gold. Talk of the U.S. dollar usually follows. It is almost important to remember that gold and currency are dynamic and have more than one input. The price of gold is impacted by a far more than just inflation. The U.S. dollar and wars. Gold is a global commodity and therefore reflects global factors, not just sentiment in one economy. For example, the gold price declined in 2000 when the UK government sold a large part of its gold reserve. Do you? I mean, y'all see the dynamics and that's why gold is so tangible. You see the dynamics of it. You know what I'm saying? Because that's why I was saying gold is universal to everyone. You know, to every country. You know, because they understand that gold is real currency. Gold is real money. Oh gosh, gold is real money. Okay, using gold as a currency. Using gold as a currency. Without the gold standard, the price of gold fluctuates freely in the market. Gold is seen as a safe haven, and a rising of gold price is often an indicator of underlying economic problems. Gold allows traders and individuals to invest, no, to exchange. I'll reiterate that, to exchange. Well, because the reason why I'm saying exchange, because I'm talking about physical gold. I'm not talking about uh, contracts and ETFs. I'm talking about physical gold, but I will get to that in a few. Okay, to invest in a commodity that can often partially shelter them from financial turmoil. As mentioned above, disruption will occur under any system, even a gold standard. Okay, I'm going to bring this back to y'all for those who do know. Is that, yeah, gold will be a disruption using gold as a currency, especially when it gets into the hands of the everyday people, the working class of people, um, that has gold in their favor as purchasing power, as hedging inflation, in time of need, and gold becoming a medium of exchange. Okay, so there will be a disruption, and you think that banks want you to know, or want gold to become a medium of exchange? No, they don't. But that sounds familiar to me while I'm thinking is because um, Mansa Musa, right? When he did his pilgrimage to Mecca, and he used to give out gold, and this, as the story goes, is that he gave out so much gold in which is currently known as Egypt now, that it really disrupted its economy. That's the power of gold. You know, that is the power of gold. That I just wanted to throw that in there. Okay. There are times when it is favorable to own gold, and other times when it is overall trend in gold will be unclear or negative. Even though the official gold standards are now gone, gold continues to be impacted by other currencies. Therefore, gold must be traded like other currencies. Okay, switching to a stronger currency can be key to preserving wealth. Switching to a stronger currency can be the key to preserving wealth. For example, Germans who held gold backed U.S. dollars during the Weimar Republic hyperinflation in Germany in the 1920s became rich rather than poor. Even when no countries are on the gold standard, investors can still buy gold. And when they buy gold, investors exchange their local currency for the currency of many of the most successful nations in history. Roman empires, the Roman Empire of Marcus Aurelius, Victorian England, and George Washington's Americas were all on the gold standard. Excuse me, I'm getting tired up here. I need something to drink. But anyway, uh, yeah. And as I say again, switching to a stronger currency can be key to preserving wealth. By purchasing gold, people can shelter themselves from times of global economic uncertainty. Trends and reversals occur in any currency, and that it is true for gold too. Gold is a proactive investment to hedge against potential risk to paper currency. Once the threat materializes, gold's advantage may have already disappeared. Therefore, gold is forward looking, and those who trade it must be forward looking as well. Okay, so what he's kind of saying that okay, it hedges against potential risk, and what potential risk? Hyperinflation. As we go back to the last paragraph when he talked about how the Germans uh, during the 1920s became rich rather than poor during Germany's hyperinflation. So when we talk about 1920s, we're talking about I think was it World War I or right after World War I? Why? Because Germany went into hyperinflation after World War I. They went into debt in the quintillions because Germany had to repay all the countries that partaken in the war in defeating them, and so they went into the quintillions. So that's where the hyperinflation came from. Okay, so correct me if I'm wrong. This is about this channel is about informing you, giving you some facts with that's history based, but also telling you about some future things that's coming, that's already here, and that's making progress. You know. Well, also, I don't. I mean, if I'm wrong about something, you can correct me. Do your research, correct me, and come back and be like, "Hey, Anthony, please," or well, I'm Anthonyfallin, as I said, but or just call me Tone Setter. Hey, look, hey, what you said, bro. Hey, this is I got what you were saying, but you kind of misspoke a little bit. This is what really happened because this is all about building. I'm not trying to tear nobody down. I'm not trying to be better than no one else. But anyway, but this is about building, adding on to one another, and informing us with more information because I'm a remain a student as well. Okay, the bottom line. Under a free market system, gold should be viewed as a currency like the euro, the Japanese yen, and the US dollar. Gold has long-standing relationship with the U.S. dollar, and and it generally moves in the opposite direction in the long run. When he means by that, it normally rises. You know what I'm saying? When there is instability in the stock market, and it's common to hear talk of creating another gold standard. Unfortunately, a gold standard isn't a flawless system. Okay, viewing gold as a currency and trading it as such can mitigate risk to paper currency and the economy. However, investors should be aware that gold is forward looking. If one waits until disaster strikes, the gold price may already have been risen too high to offer protection. I mean, come on. See, this is why we making these videos. This is why I'm making this video, because this is why I've been. If you go back and watch them, this is what that brings it home. That just brings it home right there. Okay, that brings it home right there for anyone to understand. But let me read it again. If one waits until disaster strikes, the gold price may already have risen too high to offer you protection. Because when, if and when disaster strikes, gold prices are going to soar. Gold prices are going to soar so high that you will not be able to afford it. Why? Because your paper dollar will not be worth anything. So that's why you get gold now. That's why you get gold now and hold it. And hold it in case and when and or if disaster strikes. If we are already fragile in a sense. Although the dollar is still king, cash is king, but the dollar is fragile. And I'm making that point in case because I got a load. I could sit on here for 2 hours reading. I mean, seriously, and just giving you comparisons. You know what I'm saying? Just giving you information and breaking this information down, showing and just kind of guiding you to where the trend is going, but also where the trend have always been, and that's in gold. Because I'm about to make another video right after this. Okay? So, I mean, I could stop right there, to be honest with you. Really, I can. And I think I am. I'm going to stop right there. I might just give you something else. I'll give you a little more. But no, I'm not. These banks do not want us to get a hold of gold. Do not want us to make this to make it a change, because we need to understand, people. We need to understand. I don't care if you're black. I don't care if you're white. I don't care if you're Asian. I don't care if you're Latino. I don't care where you come from in globally. But I'm talking about really particularly here in the United States. You're living in this society, and I'm trying to tell y'all, man, we have the power to do so, to make all the changes, to make the changes right. It's not going to be perfect. Right doesn't mean that it's perfect, but to just make it right means is we trying to make things fair. We trying to make things balanced. You know what I'm saying? Because there's a huge imbalance going on right now, and I'm saying that we have the power. We need to put things to the side, man, and really focus on what's really important to all of us. And right now, I'm giving you this information right now just to show you that if and when things do fail, as we have seen in 2008, and that we have seen in the 80s, and that we have seen in the 1920s, you know what I'm saying? Uh, it's a cycle that's been repeating itself, and we have dodged some bullets over the years because I'm just point referencing some of the crashes that we had, because I can go back to 2000, the 90s and 2000s, the dot-com crash, all of that. You know what I'm saying? uh, where people lost a lot of money. Not just 2008. You know what I'm saying? When we had a recession, not a depression, and we haven't had a depression since the 1929, the Great Depression is what they call it. But I'll hold back my tongue on that as well. Let's just call it what it is. That's what they say it is, so that's what it is. But anyway, but what I am discussing to you guys is that there is a way. There's a way for you of owning physical gold. In fact, there are multiple ways. Okay? Um, but I'm talking about my way. And this is my disclaimer. I'm not your financial advisor. I am not your CPA. I'm not your lawyer. I'm not certified by any way of for me to give you advice financially. Okay? So what I am talking about is that I can show you a way where you can purchase or exchange your paper money for cash gold. What I mean by cash gold is tenths of a gram of gold in a paper note, a gram of gold, up to 5.5 grams of gold at a time in small denominations. I'm trying to tell y'all, man, that this is a good move, and I'm talking about a company that I'm affiliated with. It is called Bars, and Bars International allows it wants to get uh, small denominations of gold in the hands of honest people across the world. That includes you. That includes you. Is there a business opportunity with this company? Yes, it is. We have an affiliate program where you can refer others that want to exchange their paper money for gold, and you get paid in euro that way. And you can potentially start residual to passive income. And all I'm saying to you people is that we have power in our hands. We can make this real. We can make this more real than our wildest dreams, because this this type of business that I'm affiliated with, and many other businesses that are like it, is so untapped. Why? Because people don't think it's real. People don't think it's people think that, oh, it's get rich quick. Oh, it's a Ponzi scheme. Or it's a pyramid scheme. Y'all need to look that up, because a lot of y'all throw those words out there and don't use them right. You look it up for yourself. Look up Charles Ponzi. That's where the Ponzi scheme came from. Look up a pyramid scheme. Usually there's little to no product, period. And we have a product that is like no other across uh that's in this same arena of affiliate marketing, uh network marketing, and such. That's what we have. We have a product that stands alone when we talking about this arena, this marketing arena. So all I'm saying is that you go back, hit replay on this video. Um, I made this video a lot longer than it should have been, but I just had to break it down to y'all about gold, the other currency. I got to say that it's a very good article, written by Corey Mitchell, from that writes for Investopia. You know, um, he broke down some good pointers. He made some very good points about gold currency, gold in the U.S. dollar, using gold as as a currency, and then giving a bottom line, and and allow me to drive it home to you guys, is that the longer you wait, and as this society, this global money system, um, financial money system, has a lot of uncertainty right now. It's a lot of talk about gold right now. It's a lot of talk about tariffs and trades, and the interest rates, and the repo market, which is AKA quantitative easing, would just switched up. You know what I'm saying? Just they just switched up the name. Um, about all of this turmoil that's just going on, man. And people will say, "Oh man, it's just crazy," like what the hell the world's going to. It's all part of the symptom. It's all part of something is going on, and something just ain't right. I mean, and so this is why I am putting this information out here, that we have a solution, we have a way. Now, if you want to hear more, email me. Email me. I will put my email at the bottom of this video in the description box. You want to know more about Karatbars International? Hit me up on my email, and we can talk. Okay? We can sit down, we can Zoom, you know, we can do something where I can get this information in front of you about this company that allows you to exchange your paper money for small denominal uh, gold, grams at a time, down to the tenth at a time, if you want to, where you can store gold for free up to 100 grams, and how you can make passive residual income if you're ambitious enough. Now, it could be very simple. It could be that simple if we all work together as a team. Apparently, everybody doesn't operate that way, and apparently most people don't operate that way when they all find out. You know what I'm saying? When you find out that nobody wants to play the team sport of life. Everybody wants to be about themselves in life, and themselves only. Well, I'm providing a solution. I'm showing you a solution. I'm talking about a way for you to opt out, because I'm just touching the surface again. Because I could talk about blockchain technology. I could talk about cryptocurrency right now that's backed by gold. Do you hear me? Are you listening good? Well, I'm about to close this video out. I'm about to stream it, and I'm about to make another video. So this is Anthony Fallon, Tone Setter Sports Channel. Peace. I'm out.